You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 23rd day of October, 2023. It seems like just a lifetime ago I was born on this day. True story. Thanks so much for joining us, whoever you are, wherever you are. Just glad to have you right here, right now. This is our second live broadcast of the day. First broadcast, that's our live training room. Runs from 9:15 to 11:30 a.m. Eastern. 2 hours and 15 minutes every trading day. It's an interactive environment. It's how you learn to trade. It's how we teach you how to trade. If you haven't taken your 1-week free trial, go to mytradingiq.com. And at the very top of the page, it says 5-day free trial. Just click it. The journey begins. Doesn't matter what day of the week or weekend or hour of the day that you signed up for the trial. Because the first thing we're going to do is the day you sign up, we're going to get your desktop set up, get your indicators indicating. And then the following trading day, that's when your 5-day trial will begin, and you will get 5 consecutive days, even if it stretches over a weekend. Now, when the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break and come back for the afternoon broadcast. That would be this one at 12 noon Eastern. And unlike the live training room, this broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. Best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you are done. What will happen going forward, every trading day, you'll get an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. That gives you access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join the broadcast live. You can. And there'll be days when you're busy and can't join live, but would like to check it out later. You can. What magic is this I speak of? It's called our YouTube channel. youtube.com/CFRN. It's easy to remember because you already know youtube.com, so just remember /CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,000 300 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. Okay, let us open with our daily devotional, a word of prayer, as we do every day. We started a new topic on Friday, Conversations with God. Our scripture today, Matthew chapter 22, verse 37, and I'll share it from the Message translation. Jesus said, "Love the Lord your God with all your passion and prayer and intelligence. This is the most important, the first on any list. But there is a second to set alongside it. Love others as well as you love yourself. These two commands are pegs. Everything in God's law and the prophets hangs from them." Again, that was Matthew 22:37. Pretty amazing when you think about it. Everything in the Old Testament and the New Testament hangs on that one scripture that I just shared with you. It's powerful. So, today we're going to talk about loving the Lord through prayer. Make the decision to pray by first learning to love God and make Him your first priority. Since the greatest of all the commandments is to love God, let's pause to consider the question: how is it that we really love God? Often our response indicates that we believe that loving God is equal to doing things for God. All the while, He is simply longing for us to relate to Him, to talk to Him. Think about this. What's the first thing you do every morning when you wake up? Go out for a smoke? Hopefully not. Grab a cup of coffee? Shower? Maybe first thing we should all do the moment we open our eyes because we've been granted another day on planet Earth is talk to God. Now, a conversation is a two-way street. When you have two people and one is talking and the other one's just listening, well, that's kind of a speech. God's not looking for a speech. He's looking to have an intimate conversation with you about your life, your situation, and your circumstances. How many mornings do we leave Him in mid-thought, ready to have a conversation with you, but, well, we got things to do. We got to go outside, get that smoke, got to get a cup of coffee, we got to shower, Priorities. If God needed things done, He could enlist the angels for perfect execution and without complaint. We, as His created, have the privilege of intimacy with Him. Our journey with God in prayer provides this unique opportunity. So, as we approach Him in prayer, where do we begin? We share our love for the Lord in many relational ways. And one of the most important is through our gratitude. We are encouraged in Psalm 100 to worship the Lord with gladness. Enter His gates with thanksgiving. Prayer is the journey into deepened love with the Lord that begins with thanksgiving. I encourage everyone, when you open your eyes, pause and pray a prayer of thanksgiving. Tell God that you're going to serve Him today with a glad heart, because this is the day He has made, and you're going to be glad in it. Whatever your situation, whatever your circumstances. It could go something like, Father, as I reflect on the countless ways you have loved me well, my heart overflows with thanksgiving. I'm especially grateful for how you have blessed me with fill in the blank, and how you have sustained me through fill in the blank. I praise you for your generosity and grace. Receive my thanksgiving and praise as a small expression of my deep love. Not a bad way to start the day. Join me in a word of prayer. Heavenly Father, as we come before you today, we reflect on this profound command found in Matthew 22, where Jesus teaches us to love you with all of our heart, soul, and mind. We acknowledge that this love is the foundation of our faith and the source of all our actions. Lord, as we consider the protection of Israel, we remember your special covenant with this nation and its people. We pray for their safety, security, and well-being in the midst of the challenges and conflicts they currently face and have faced since time began. May your love and protection be a shield around Israel, guarding them from harm, providing wisdom to their leaders as they make crucial decisions. We pray for peace in the region and for the safety of all those who call Israel their home. Lord, we also pray for our own hearts, that we may truly love you with all of our being. Help us to surrender our lives to your will, seeking your wisdom and guidance in all that we do. May our love for you overflow into our love for our neighbors, both near and far. As we live out the commandment to love our neighbors as ourselves, may we be agents of reconciliation and peacemakers in the world. Thank you, Lord, for the privilege of approaching your throne in prayer, both for the protection of Israel and the transformation of our own hearts. May our love for you be a testament to your grace and mercy. It's in Jesus' name, believe and pray. And everybody said, Amen. Amen. Happy Monday. I hope it is a good one for you, whoever you are, wherever you are. Let us begin today by me giving you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 49 points. The NASDAQ is up 82 points. S&P 500 is up 9 points. And the Russell 2000, a man in the street, is up 1.5 points. In the commodity basket, crude oil down $1.62, trading 86.46 last. That's a drop of almost 2%. Gold down $7.10, trading 19.8730 last. Silver down 26 cents, trading 23.24 last. In the Asian markets at the close, the Nikkei fell 259 points, almost 1%. Shanghai dropped 43, and for the Shanghai, that's 1.5%. The Hang Seng fell 123 points. So we had a red day in Asia. Oh, the European markets. FTSE down 27. DAX up 2.25. The CAC up 34. Pretty quiet, thin trade there. I almost missed it. So we had a red day in Asia, a mixed day in the UK, and currently it is a mixed Radio Monday here in the US of A. We got one of the major indices in the red, the Dow, 40 points, which really, in the grand scheme of things, it's not much. The other three, on the other hand, are in the green. Not by a lot, but definitely in the green. So as futures traders, we like to see all of the four major indices the same color. Now, we don't care if they're green or red. We just like to see them all the same color, because that's when we get some of our best high probability, low risk trade opportunities, because we have follow through. It's that momentum created when everything's moving in the same direction. So the only one fighting the trend right now is the Dow. Or is the Dow outsmarting everything else? And everybody said, we'll probably know the answer to the question by the end of this broadcast. Let's go to Logic 247. Best Sunday night I remember in a while. We're in week 273, and over the last 273 weeks, we've issued over 15,200 individual handcrafted alerts. Since the markets opened last night at 6 p.m. Eastern, we've issued a total of 8 alerts. No stop outs. 100%. Nice. It's been a while, I gotta say. So we're happy to see that. What we've averaged over the last 273 weeks on a weekly basis is 20% or less of the alerts being stopped out based on the risk profile that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. I think last week we ended up with like 28%. rough week. So nice on a Monday to get off to a much better start. In fact, those of you that may be new, let's just take a quick peek at where we be. Okay. This was the final recap Valerie did Friday afternoon. The whole week last week, we only issued 27 alerts, and it had to do with market structure. 2 never triggered. We had 25 actionable alerts, 7 stop outs, 28%. Yeah. But again, over the last 273 weeks, we've averaged 20% or less. Some weeks a lot less. 2%, 3%, 5%, 7%. The average. Now, with 52 weeks in a year, 273 weeks, that's a pretty long time. It's like 5 years. So, we're thankful for that. Last night, the markets opened. Now, the time you see here is Pacific time because I'm on Pacific time. And Telegram displays everything in your time zone. If you're in Central, you're seeing a different number. If you're on the East Coast, you're seeing 6:56 p.m. on your computer. Okay? Sometimes people get confused. Now, let me say this. I said it last week, but I'll say it again. The weekend of November 5th, that's when everybody changes their clocks. It's the end of daylight savings time. Congress has been trying to make daylight savings time permanent, but I don't expect it to happen before November 5th because, I mean, we can't even get a speaker elected, so it's just embarrassing, but it is what it is. So the markets opened last night. So if you're looking at this same Telegram channel on your computer and you're on the East Coast, well, it's showing what the way it works is Telegram reads the clock on your computer. And we all know that the clock on your computer will reflect whatever time zone you're in, unless you do something weird with it. So the first alert last night was alert number 15,252. So good chance we'll hit 15,300 this week if market structure holds up. We had a short on the ES. We had a short on the Dow. S means sell. T is initial target. Potential support, that would be target number 2. And then on every short, the final trade to target is the weekly trading zone below. Now the new zones don't come out till Monday morning at 6:15 a.m. Eastern, so on Sunday night, all alerts are based off the previous zones. Had a short on the Dow, initial target, second target, third target. If there were a B here, that would be buy, but S is sell. Short on the Russell, short on the NQ, short on crude oil, short on gold, short on silver, and short on the euro. Okay. Now, the initial target is designed to help you get your goal for the day. Like with gold, it takes a $1 move in price to get your goal for the day. Silver takes 2 pennies. Euro takes 80 ticks. crude oil takes 10 ticks. The NQ takes 10 ticks. The Russell takes 2 points. The Dow takes 20 points. And the ES takes 2 points. Now, with that said and done, let's take a look. Now, let me explain a little better on these multiple targets. That's because I've looked left. This is a short. I'm going to be looking left to find previous swing lows that could become potential support. So you can look at it as a target, and if price trades through it, then the next potential support, because I've already looked left for you. On the logic alerts, I looked left for you. Now, the alerts are not designed for you to just trade so you don't have to learn how to trade. They're part of the whole training package, okay? Because our goal is for you to become self-sufficient. And what do I mean by self-sufficient? Well, what I mean is I messed up my thing. Here we go. You don't want to mess up your thing. No, that's too far. There we go. Okay. Our goal is for you to become self-sufficient. If you want to trade for a living, number one, let's be honest with you. There's a learning curve. Okay, it's a process. It's not going to happen overnight. You learn how to execute a trade, manage the risk, and exit every day in the live trading room. What I do has to do with showing you where the windows of opportunity exist and teaching you how to spot those windows of opportunity yourself. Once you're able to do what I teach you and what Michael teaches you, you no longer need us. Now, as a passport holder, you got lifetime access to everything we do, everything we've ever done, and whatever we do in the future. The live training room, to the weekly trading zones, unlimited one-on-one mentoring. We have people sometimes that'll go away for a year. We won't hear from them. Sometimes 2 years, and all of a sudden they pop back up. Am I still welcome here? Of course you are. You're a passport holder. Lifetime membership, right? No asterisk, no fine print. Member for life. Round-the-clock support via Telegram. Logic alerts, concierge trade alerts. Thursday night members-only workshops. Everything. Get your passport, go here. Emini Futures Trading. All right, but what I wanted to get to was our original alert service, the concierge trade alerts. They're a little bit different than the logic alerts in a couple different ways. Now, the logic alerts are based on current price action. However, there is time built in to each logic alert so that you have time to get the alert, look at the corresponding 30-minute chart, see the window of opportunity with your own eyes, and be prepared to do what Michael teaches you to do when price gets to the window of opportunity. See, once you understand what Michael teaches you, and once you understand how to find the windows of opportunity, that's it. That's all you need. There's nothing to practice, no reason to sit for hours in front of the screen. Go do something meaningful with your life with the money you make. Okay. Now the CTAs are based on historic price action. When current price action meets historic price action, that's where you find some of your best high probability, low risk trade opportunities. The logic alerts come out around the clock, 24/7. An alert can come out at 2 a.m. or 2 p.m. That's because futures trade around the clock and we have traders around the globe. Their day session is our night session and vice versa. Shortly after the Globex open each evening, that's when the CTAs are posted. On average, I would say it's somewhere between 6:15 and 6:30. Last night was a little later than normal, 6:50. Okay. So if you come from the world of stock trading, you're accustomed to the week starting Monday morning at 9:30 a.m. Eastern when Wall Street wakes up. But as you learn about futures trade around the clock. There's a 1-hour break each day. This is the Monday session, which began Sunday night at 6 p.m. Eastern. But today at 5 p.m. Eastern, the Monday session will end. Markets will go quiet for 1 hour. Got to sweep up, empty the ashtrays. And then tonight at 6 p.m. Eastern, the markets will come back to life, and that will be the beginning of the Tuesday session. Okay. So when this report is published, first thing you want to do is go to the 30-minute chart of whatever market or markets you trade. We use the ES as an example. You want to make a note of where price was at the time the alert came out or the report came out. Then draw a line in the sand at the long target. Draw a line in the sand at the short target. These will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. Now, on the logic alerts, I've already looked left for you. So after the initial target, you'll see potential support, potential support. If it's a long trade, then after the initial target, you'll see potential resistance, potential resistance. The final trade to target on a short is always the weekly zone below. On a long, it's the weekly zone above. So on the logic alerts, I've looked left for you. The CTAs, you get to look left yourself. It's a process of teaching you to become self-sufficient. You also, along with learning to look left, you learn how price behaves at a weekly trading zone. We've published the zones since December 14th of 2009, every week for our members. They come out at 6:15 a.m. Eastern Monday morning. Once they're published, they're carved in stone for the entire week. They do not change in any way whatsoever. Now, any alerts that go out on Sunday night, they're still based on the previous weekly zones, because the new zones don't get published till 6:15 a.m. Eastern. Okay? So any alerts that I put out today and the rest of the week, of course, will be those new zones came out this morning. Publish them early enough so that our traders can actually get them on their charts before Wall Street even wakes up for the week. But don't throw out the old zones with the bathwater, okay? You can leave them on your chart, but then things that gets kind of crowded, you can keep them on a notepad, however you want to do it. But often into Monday, sometimes even into Tuesday, price will still respect the previous weekly zones, along with respecting the new weekly zone. So stay conscious of them, okay? Now, this is important. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night at 6 p.m. Eastern until they close Friday afternoon at 5 p.m. Eastern. If price is above the 30-minute BBC, it's trying to reach the weekly zone above. If price is below the 30-minute BBC, it's trying to reach the zone below. Now, this all sounds very, very simple, and actually it is. We've worked very hard for many years to make it as simple as humanly possible. You have to resist the urge to make it more complicated than that. If you come from a world of where you had a chart with, 20 different indicators on it, and just, you're reading tip sheets, and you can make it hard. You can make it as complicated as you want it to be, or you can let it be as simple as it really is. Trading's not easy, but it can be simple. Once you learn how to filter out all the noise and just look at what's important. And it's taken us years, since 2008, really. We started in 2006, but 2008 we kind of had it nailed, and things have improved over the years. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's go take a look at our daily chart. Now, this is a daily chart of the S&P. And I know you're saying, well, I don't trade the S&P. That's okay. Whatever markets you trade, it has a daily chart as well. If you trade the indices, the S&P is the bellwether. Now, sometimes the other three may get out in front or lag behind at any given time, but ultimately, the other three are going to follow the leadership of the S&P. 500 large cap companies. Okay. Now, we've been talking about this head and shoulders pattern forever. And back on Friday, we filled the window that was drawn Thursday night during the workshop. And then, this would have been Friday, we filled the second window. And now today we came within, see, what do we got for the 62? Is it 42.0? It's like 42.09 hit back there. And today's low is 42.13. Okay. So price has done everything we thought it would do since we identified this big old head and shoulders pattern. Top of the head, the left shoulder, the right shoulder, came down to the 50, got a mighty bounce up to the 38, consolidated for like a week at the 50, then we consolidated for a week at the 38. Then price got back below the BBC, and we drew in this window of opportunity Thursday night in the workshop, as I recall. And then on actually it was this one. This is, yeah. And this one we drew Thursday night, and it filled Friday. The next thing would have been for me to draw a window down to the 62. We talked about it, but I never actually drew the window. Okay, you got to learn to do some of these things your own for yourself. But we talked about once price takes out this low right here, that it would head to the 62. It's just how markets work. Now, when you have a head and shoulders pattern, and we really aren't pattern recognition people, but this one's just so big, so massive, that you can't ignore it. Because all the people who've read all the Technical Analysis 101 books have been well schooled in a head and shoulders pattern and how it's supposed to work. You measure from the top of the head to the neckline, then once price breaks the neckline, you take your measuring stick and you drag it down to the neckline, and in theory it tells you where price is going to end up. What makes this particular head and shoulders pattern really interesting is when we have a bullish cross, that's when the blue line gets above the green line, whether it's on the daily chart or the 30-minute chart. A bullish cross that leads to an extended move, first time price revisits that area will almost always be good support. The fact that that just so happens to line up with the measured move, it's interesting. Is it anything more than that? No, probably not. I think it doubles the potential for price to actually get to this area. And, for reasons I won't even go into today, I think we end up going much lower than that, but we'll see. Not a forecast, just an observation. So we've bounced off the 62. Where we close today will be very important. Would it be unseemly for us to come up to the 50, find resistance, and then put in another leg that takes us all the way down to the 62? No, that would be very logical. Or buyers haven't moved the needle a lot here lately. So by the close of today's session, we could be back at the 62. But that is one beautiful text. You should print that out. It's a beautiful textbook head and shoulders pattern. I put it in the discussion group channel this morning, as I've done every day now for probably a month or two. You should print it out, stick it on the wall. Again, we're not pattern recognition people, but this is a daily chart, and it's just so big and so obvious, and it's behaved just in a textbook fashion. So they always behave in a textbook fashion? No. Now, when I come back, we'll start with our recap of the CTA alerts, but Michael is here. So he's going to give us a recap of everything that happened this morning in the live training room. Then we'll go live for 30 minutes on the TradingView platform. And then when we're done there, I will recap all of the markets that we published the CTAs for. And then we'll wrap it up with our good word for the day. Excellent. All right. It's all yours. Looks good.
Here we go. Thank you. All right. Good afternoon, everyone. Today is Monday, the 23rd day of October, 2023. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com. Right here is to sign up for your free 5-day training now, 9:15 to 11:30. Click on that. You're going to be brought to this registration page. All right. Just fill out this little form. There is no credit card required. Fill out this little form and you get to take the trial for 5 consecutive business days. When you're doing the trial, you should get your trading platform working for you. All right. Get it running on your desktop in front of you. You want to make sure you do that. All right. You'll really get the most out of your trial if you do that. All right. So the spreadsheet, if you're going to read the spreadsheet, you have if you are going to read the spreadsheet, sorry, you have to read all the CFTC risk disclosures down at the bottom. Today is the 23rd day of October, 2023. We made 72 ticks in the NQ. We lost 7 in Russell, and we lost 18 on crude. We made 4 on the ES. That put us at plus 195 in the morning session. Today, it took 21 minutes and 6 trades to get to the goal for the day. At that point, we're up $1,350, which is a total of 30 trades. So on the month now, we're up $7,607. That's over 16 trading days, averaging $475 per contract per 2-hour trading day. On the year, so far, we've got our goal on 196 out of 201 days, making $88,902 per contract and averaging $442 with 1 contract for the morning session. Over here is where you want to be: consistently profitable, quitting when you get your goal for the day, and adding 1 contract per month. If you were to do that this year and trade everything just like I did in the morning, you would have only had to work 66.76 hours so far this year, and you would have averaged $2,353 per hour for those 66.76 hours this morning. This year, in the morning session. All right, let's get into the actual trades. Crude oil seems to have made a move here since we started it. Yeah, here it was. It did make a move since we stopped looking at it here at 11:30. We kind of got it handed to us today on crude. We started out with crude, and we ended up getting 2 ticks profit on this trade right here. Right, now, I think we did have like 10 ticks profit in that at one point, but I didn't take it, and I ended up getting just 2. I was expecting it to get down to this level, which it eventually did, but I was looking to get there on that move. Then we took this one here, and I think I had 4 ticks profit in the trade, but I didn't move it fast enough, and it stopped me out. So at that point, my 8 ticks, I missed this trade, and I took this one, and this one stopped me out pretty much to the tick. And then when it did what it should have done, got back up into the zone. I got rejected by the zone. Went back down to this level down here. See, 3 times it hit that level. Well, 4 times actually, but it was 90, I think. I don't know. But anyway, it's down there somewhere. I think it was 90. 86, 90. There it was. We got into the training in there. It was all flat. There was in a trade through there. Then the morning session ended right here. So we didn't have any green arrows through here until all the way down here during the break, and that would have stopped you out if you took that green arrow. It kept going all the way down to the zone through the midpoint. Hesitated once it got to the midpoint. Consolidated a little bit. Pulled back up to it, then moved down off of it, and yeah, so that was it right in there. Got down through the weekly trading zone. It's probably going to come back up and test it, I would think, but it's not doing it right now. Okay, that was the crude. We ended up with minus 18 ticks on crude. The Russell. Let's go back to the very beginning on the Russell. The very beginning on the Russell. Those of you guys who are in here or passport holders, there's some good stuff coming your way, I think. All right, so here we go. This is what we did with Russell today. We had a shorting opportunity. The very first opportunity we took on the Russell was right here. We picked up 3 ticks on that one. Then I didn't take anything else all through here. This was the trade to take right here. You wouldn't have gotten those 2 arrows because this one did put in a lower swing, but you could have taken some profit on that. There's another one here that you could have taken. Nice green arrow there. A couple more through there. And then we had this one that we stopped out on, and that put us at minus 7. And we had a few more in here that we got into the training here where I wasn't trading at all. Lots of arrows though. Lots of nice arrows. We got another one right here. We stopped out again, minus 17. And then we picked up 10 ticks on this to get us back to minus 7. One more break even trade in here. I didn't want to take this because it was going into a weekly trading zone. But you know, the ones with the black line in the green, those are your higher probability. The black line was not in the green. Not the higher probability. This one, black line in the green, higher probability. Higher probability. During the break, we had another green arrow right there that worked out, one right here that worked out, and one right here that worked out. This would have been the only one you take here because it's got to put in a swing every time you take a trade. So we ended up with -7 on the Russell this morning. The ES, we had a few trades on the ES today too. I don't remember why I drew those in there, but actually there was a good reason. All right, so on the ES was right in here. We ended up with a break even on that one. And then the next one here, we picked up 4 ticks on that. And then right here we had we didn't have anything there. Well, we had green arrows, so you could have taken either one of these green arrows. I was looking for the ones with the black line and the green. And that just happened over here, one with the black line and the green. But I ended up with just 4 ticks. So we did have some good opportunity there on the ES. It just wasn't a ton of it. The NQ, now when I had last counted, taking the green arrows with the black line in the green, it was probably around, I don't know, I want to say it was around 10:30, I think. And we had, out of 7 trades, 6 of them were profitable. 1 of them would have stopped out. So I'm just saying, if you just learn to do one thing, that is the one thing you need to learn to do. Okay. Let me check and see who all is in here right now. Okay. Let's go back to all the way to the beginning here. What time is it? 12:56. Let me make sure I got that other thing ready to go. I do. Okay. Come on. All right. Here we go. Our first trade on the NQ was right here. And that one, I don't know how it ended up stopping me out, but it did to the tick. I had like 3 of them today that stopped me out to the tick, and they went on, did what they should have done. So it was -20 right there. And then I picked up 30 ticks on this one. I actually got this one too. I thought I got that one. I don't remember what exactly happened there, but I did get this one, and I got 30 ticks on that. That put me to +10. Then I missed that one and that one. And I got this one for 30 ticks to get me to +40. The next one, I had a break even, and I had somewhere in here I had to stop out. You can see there were more green arrows in here that were decent trades. I had another break even there. The next one I had marked down as a stop out though. So I don't know where the heck that happened. There's 3 break evens in a row, 4 break evens in a row, 5, 6 break evens in a row, 7 break evens in a row. And here we have our stop out. So we went from 40 down to 20. Then I picked up 4 ticks there to get to 24. And then I believe we got into the training. I did take some trades during the training as well. We can see in here, if you just take the trades with the black, the green arrow trades with the black is in the green. Green arrow trades with the black is in the green. Green arrow trades with the black is in the green. All right, I had a break even there, then another break even there, then another break even there, another break even there. So I had a lot of break evens on the NQ today. Here I had picked up another 4 to get 28. Then the last half an hour happened. We had a +30 to get me from 28 to 38. Then a +4 to get me from 58. I was right, 28 to 58. And then a +4 to get me from 58 to 62. Then a +30 to get me from 62 to 92. And then a stop out right at the end. And so I went from 62 down to 72. And that is where I ended it for the morning session. Okay, now during the break, let's just look at the ones where the black line was in the green. Here's one right here. That would have been a break even. Here's one right here. That would have been +30. Here's one right here. That would have been probably a break even for me. Only the first one would have counted. Here's one right here. That would have been a +30. So +60 overall out of 4 trades. If you just do the ones where the black line is in the green. All right. That is it, guys. With that, I'm gonna go back here for just a second, go over this one more time. today. I'm sorry, today is the 23rd day, Monday, the 23rd day of October 2023. We made 72 ticks on the NQ. We lost 7, and the Russell we lost 18, and crude we made 4 in the ES. Put us at plus 195 in the morning session. Today it took 21 minutes and 6 trades to get to $1,350, and we took a total of 30 trades this morning. 30 trades. That's a lot. Anyway, on the month, we're at $7,670 a contract, and on the year, we're at $88,900 a contract. All right. If you were to quit trading when you get your goal for the day, so far this year, and you added 1 contract per month, so far this year would have averaged $2,353. So what that means is, so far this year, quitting when we get the goal for the day. If we were to quit and add 1 contract a month so far this year, what I did in the room, I made $157,165. That's not bad for 66.76 hours. All right. It's time to start the live stream. So let me get back over there. And I'll put, and if anybody has, feel free to jump in and ask. Okay. The live stream, I believe, has started. It has. Okay, so what we're looking for right now, we had a few black arrows through here that did not put in a higher, well, they all put in higher swings. They were great trades, and I put in higher swings. This last one didn't yet. We already had a green arrow in this direction, so I have to wait for another green arrow. We don't have to wait for another bounce off the ribbon, but I'm going to. Over here on crude, from 11:30 to now, we had a huge move down in crude, and we got down below this weekly trading zone. We went from this place way up through the midpoint down to this weekly trading zone. And so now I'm kind of waiting for it to pull back. Here on the ES, we just got up to a weekly trading zone. That needs to pull back and give us an opportunity off the ribbon to go back up and test it again. And the Russell went through the weekly trading zone. It's headed toward the midpoint between the next weekly trading zone and the last one. So we're kind of waiting right now. If you're in the live stream and you're watching, you don't want to see anything other than futures. All you have to do is type in a symbol. Okay, I'd be happy to go look at whatever you want me to look at right now. Okay. All right. So the NQ's got a green arrow over here, and that's starting to move. My stop's even on. So I have a 30-tick target on every trade. Actually, I have a 30-tick target. And so that one took me on break even. Now I entered a little bit lower. That's why I had 8 ticks in profit on it. The rules for the trade setups, if you're watching a live stream, first, if you're watching a live stream and you haven't taken a free trial, go here to mytradingiq.com. This is where you sign up for the free trial. All right. There's no credit card required. Just sign up for the trial. It'll give you access to the indicators. You have to give us your TradingView login ID right here. That's how we give you access to the indicators. When we do give you access to the indicators, you will have a thing that looks like this, invite only scripts, and you'll have access to this one and this one. There, those two. Okay, and that is all you will need to get your charts looking just like this. As a matter of fact, if you do that, and we give you access to get your charts looking exactly like this, all you need to do is go here to mytradingiq.com, click on Trade Rules, and go down to right here. Click on this, depending what level you have. You know, if you're a TradingView Pro user, click this one and get 2 charts. If you're a TradingView Pro Plus or above, click that one and you'll get exactly what I have. You see the URL here? That is this URL right here. You have exactly what I have. Well, let me save it right now. Now you'll have exactly what I have. All right, it'll be a read-only copy. You'll have to click up in the upper right-hand corner up here. There'll be a word copy. Click on that and you'll be able to save it as your own. Okay. And that is what you're looking for, right? We're getting that pullback that I was looking for here on the ES. Now I wanted to go up, hit the ribbon, the zone pullback, give us something off the ribbon. The crude oil did give us the green arrow. That pulled back, gave us a nice green arrow. I didn't get into that trade. The only trade I've taken so far is this one over here. But you can see these nice green arrows, giving these beautiful trades. So for this one, give us a break even. But they're there. You just have to wait for them. Look at all these gaps over here on the crude oil. I don't know what's happening with crude right now, but it's down to $85 a barrel, 85.5. If anybody has any questions, you want any other symbol, all you have to do is type it in. Okay. Yeah, but go and look at it. David Z, I sent you the link for our meeting coming up here. Okay, so you should have that already. And what we're looking for on the crude is for price to get up into the ribbon. I'm sorry, get up into the ribbon, or for the lead line in the slingshot to get up into the overbought. That's what we're looking for in there. All right. All right, so the ES gave us a green arrow off the ribbon right here. That is a valid long trade. We're in it right now, and we go to break even after we get 4 ticks in profit. We haven't gotten that yet. We have 2, we've had 3, but we haven't got to 4 yet. Okay, I don't really see where the ES is trying to get to. If you look down here at the bottom, you can usually tell on the bottom where it's going to, what direction it's going to go, and it is trying to move up. I think right there is where it's probably trying to get to, right? 42.78. It needs to go 1 more tick. There it is. Stop to break even now. Stop plus a tick. And 42.78 is what I was saying. I have a target all the way up here. I'll drag that down to 42.78. And there we go. We'll lock in 4 ticks on this right now. And we'll go for that 42.78 right now. Now, the weekly trading zone is up here actually at 42.81. It's also the high of the day. So I'm gonna bump that back up. I'll leave it up there. We're gonna get 4 ticks. We're gonna get a whole bunch more. We ended up with 4. Okay, so that's 4. Over there on the crude oil right now, it's got a short. It's got a short over there, and what we anticipate on this is that it's going to get down here to the swing low. All right, now we got a black arrow because we came out of the overbought, but it's not bouncing off the ribbon, so we don't have the green arrow. All right, if you want to wait for the green arrow, and I like the green arrows, if you want to wait for the green arrow, wait for it to come up here and hit the ribbon. Okay, when it comes up there and hits the ribbon, gives you a down close. You should pull out of the overbought, and that'll give you a green arrow. Okay, the green arrows, I like those. The green arrows where the black line is in the right color, or even better. Those are your highest probability trade. Get a green arrow where the black line is in the right color. Here's the green arrow on the NQ. That needs to go 8 ticks into profit, and I will bump the stop to break even. So it's going to go down to 26.75 right there, and I'll bump that stop to break even. Okay, it hasn't done it yet. Almost there. Almost. Didn't it just hit it? Thought it just hit it. There, now it did. All right, stop to break even on the NQ. We're back in the ribbon over here now on the crude. So that one is now looking at 65 down to 57. All right. Now on the NQ, I'm just going to lock in 2 little ticks to pay for the cost. And we do have a 30 tick target on that, but we'd be looking for it to get down here to 14.819 is where that should go down to. I'm going to lock in a point on that right now. And 819, it should go through this 30 tick target all the way down to 819. All right, that one just took me out with 4 ticks in profit. Still waiting to take a trade over here on the crude oil. 85.69 down to 85.61 on the crude. And the ES, what did we do with the ES? We took a +4 on the ES, that's right. So yeah, +4 there, +4 there. And I don't know why that is showing up on that side, but I will, oh, that's why, because I have it like that. Right, I'll move that over. All right, the crude oil finally gave the green arrow here, but it's not with the black line in the red, so it's not the highest probability green arrow, but it is still a green arrow nevertheless. All right, so here it is, and that needs to go 4 ticks into profit to get stop to break even. 1 more tick, and there it is, stop to break even on the crude. Now on the NQ over here, for those guys that are watching the NQ, it did not put in a lower swing here, so you cannot take the second green arrow. All right, we ended up break even on the crude. We need to put in a higher swing here on the ES, so it's got to go up into the ribbon and into a new high of the day to do that. All right. All right. So the crude oil is trying to get down to 85.60, and then below 85.60, 85.52. Those are the numbers. Okay, I'll draw them in there for you. This one is just right here. That's not a big deal. But the one below it is a little further down. Oops. Didn't give it to me. Hang on, down here. There it is. All right, so over here we want to see a lower swing. We want to see that drop down below there. You know, something that I never talk about that I went over in the, well, it's part of today's lesson plan. Okay, and what I did in today's lesson plan, I don't usually do when I do a comparison between the different platforms. Today I put trades on the NQ right next to the TradingView NQ, and I was able to go through why we had trades. And like right in here, we had 3 arrows right here. One of those was a good arrow. Over here on DT, none of those were trades. It was just sort of illustrating how much easier it is to do stuff with TradingView than it is with the other platforms. Not to say that the other platforms don't work. I mean, we did that. The spreadsheet that we have that goes back over 10 years, 2013 up till 2023, is doing it the way that we did it. 2023 is when we started keeping track of the spreadsheet with just the TradingView information. Okay, but yeah, the other thing I was going to say, so far you've seen us take profit on the ES, take a break even over here, and take profit on the NQ. The NQ is $5 per tick per contract. So every movement up and down, every movement in here up and down is 1 tick. All right, it's a little easier to keep track of on the ES because it doesn't move as fast, but every movement up and down. For the ES though, it's $12.50 per tick per contract. So you see right now I'm trading 10 contracts. That's because it's the 10th month and I worked my way up to 10 contracts by getting $2,000 per contract per month. So this month we had to hit $20,000 getting the goal for the day, and we are at 22 right now. So we're ready to go to the 11th contract next week, like Wednesday, right? It's November 1st. Yeah, Wednesday is November 1st. So next week we're going to be going to the 11th contract, and we've earned our way up to it. So for me, what I was getting at with the ES, because I have 10 contracts on, every tick is $125. Right? If you have 1 contract on, it's $12.50. That's what the ES is. The NQ is 5, the Russell is 5, and the crude oil is 10. Now I interchange gold in here between these two sometimes, and gold is also 10. Over here on the NQ, we're in the overbought. We're going to have a back arrow if we pull out of the overbought right now. Okay. So now we're almost up into the ribbon. If we get up into the ribbon and then we pull out of the overbought, we're going to have a green arrow, right? And if the black line stays in the red, that will be our highest probability trade. We're not there yet, but we're almost there. Okay, we're not there yet, but we're almost there. All right. So we did not come out of the overbought, so we don't have any kind of an arrow right now. All right, it's got to come out of the overbought to give us any kind of an arrow. It's got to hit the ribbon and come out of the overbought to give us a green one. If it just comes out of the overbought, it'll give us a black arrow right now. Okay. Does anybody have any questions for me? Anybody want to see any other symbols? I see any stocks, ETFs, anything like that? Still haven't come out of the overbought over here. Now we're getting rid. If it comes out of the overbought now, it's going to give us a green arrow with the black and the red, highest probability trade. It's going to be 17.25 minus 4 will be 13.25. Okay, see how I did that? This is a 15 tick range bar, so you want your order to be weighting 4 points from the top of the bar, like that. 4 points from the top of the bar. So even if it doesn't come out of the overbought now because we're hitting the ribbon, it's going to be a trade. So I can put this order on confidently right now. And we can even get better. So I'm just going to jump in right there. And so we're short right now. We want 8 ticks in profit to bump the stop to break even. And there's 8 ticks, stop to break even. And so we anticipate it's going to get all the way down here to the prior swing low. I think it's going to go down to the weekly trading zone down below that. So we should get 30 ticks out of this trade right here. But the worst case scenario is we're going to get a break even. Right? We should get the full 30 ticks out of it. Hopefully it's not going to take me out of break even first. It is going to, I'm going to say it. I can't say that it is going to go down here, but it really wants to move down here. Okay, whether it takes me out of break even first or not. Yeah, it took me out of break even first. Okay, but it really does want to get down there. That's my feeling. No, you can't trade feelings. You gotta trade what's in front of you. That's what I always say. Trade what's in front of you. What was in front of me right there was an opportunity to take about 10 ticks. We got a second green arrow. Now you can't take this one. The green arrow, the first green arrow has to put in a lower swing. The first green arrow has to be successful. You can't take any other arrow after the first green arrow. It's got to continue the trend. Okay. It must continue the trend. Whoops. We don't have a lower swing there, so we're not able to take another trade here yet. Okay. And we anticipate that it's going to get down through this level over here. I fully anticipate that it's going to do that. We're not in it, so we can't do it, but we expect. Okay. And there we go. Right down. Exceeded the prior swing low, right down to the weekly trading zone. Any questions? Anybody? Anybody? All right. See, I'm not going to take a black arrow going right into the zone like this, but you see the green arrow with the black and the right color. Nice probability trade. You see it again and again and again. All right. There it is, into the ribbon again. Now we want to go with the ribbon this time, but we want to drop, not the ribbon, the weekly trading zone. We want to drop well through it though, and get the ribbon actually down into it. So that'll act as a great area of support or resistance that is on the Russell right now. That's what we'd really like to see. Anybody that's watching the live stream, if you have any questions, you want to know anything, feel free to ask. If you haven't taken a free trial with us and you want to, go here to mytradingiq.com. This is where you sign up for the free trial, right? Okay. It goes from 9:15 to 11:30 every business day. And the registration form is right here. This is what it would be sent to if you click on that button. Make sure you give us your TradingView login ID or username so we can activate the indicators for you. The only way for you to get these indicators is to sign up for the free trial. Right? That's the only way for you to get those indicators. And look at the movement we're getting right now on the NQ. Went right through the zone, and now it's pulling back. Some of the indices are dropping right now. So I'm going to get ready to place trades. We need to pull back up to the ribbon. Would be great. This is what I was looking for right here. We wanted the ribbon to be in the weekly trading zone. Like this one is over here on the Russell. That's exactly what I was looking for. Okay, now we just need to pull back and give us an opportunity to trade it. Okay, we're getting the opportunity just about now. We might get a green arrow. Yep, we're going to get a green arrow. It's going to come out of the weekly trading zone. We should have a green arrow coming up here. We retrace good 50%, I think, of what we just went down. So it's primed for a good move down right here. This is exactly what I was looking for. The ribbon coming off the weekly trading zone. Now there's a chance it's just going to run right back through it, do 100% retracement, and then that'll mess everything up. So now there's a chance we won't get a trade. Watch these other markets. So the other market's about to give it. The ES is almost there. The crude oil is actually about ready to go long. The Russell already gave it. Here's the Russell. Stop to break even on that one. Going to lock in 4 ticks on the Russell. The crude oil give that. It's going to give a long. It should go up to the zone. And that's the Russell. Okay, the ES is also giving it up right here. On the Russell, I'm going to lock in some more profit on that. All right, I'm going to lock in 10 ticks on the Russell, and I'm out with 10 ticks on the Russell. I'm also long the crude oil. The crude stop is going to break even. I'm short the ES. That stop is going to go to break even. All right, it's all coming together at once right here. The NQ is the only thing that didn't give us trade. I'm going to lock in 1 tick on the ES. I'm out at break even again on the crude. All right, so the ES should go down to this level right here, right? 63.50. 63.50. That is here. Now it should go through that number. Actually, I just locked in 1 tick on it and I got out with 1 tick. That was a little flurry of activity. Right, so we ended up with a break even here, 10 ticks profit there, 1 tick profit there, and no trade at all there. But it all came together at once. I don't know what happened, but again, just trade what's in front of you. All right, the opportunity just comes again and again and again every day. All you have to do is get in there and place the trade. Follow the plan. Okay, on the crude oil, we had 4 ticks in profit. We wanted to break even. It took us out at 4 ticks, so we're not stopping out on that move back down. On the Russell, we had the green arrow short right here. It was actually a bounce off the ribbon right here because the black was in the red. I didn't take the actual green arrow. I took the bounce off the ribbon right here. So I got 10 ticks profit in that. I took the bounce off the ribbon right here. I didn't wait for the black. 1 tick profit in that. I didn't do anything over here. So let me explain that to you, what I did right there. All right, if you go to mytradingiq.com and you click on trade rules, both of those were short trades without the slingshot. Okay, the reason it was without the slingshot is because it did not come out of the overbought on either one of those. It hit the ribbon, but did not come out of the overbought. Right? So the rule says the black line and the ribbon must be on top, and it was, and it must be in the red, and it was, and price must touch the ribbon on the pullback, and it did. Now, with the slingshot, black line must be on top, and it's going to be in the red or silver, but this is the and part right here, in uppercase, and the lead black line and slingshot must cross below the overbought level. All right? And that's what didn't happen. That's why it was considered without the slingshot, because we didn't cross out of the overbought. It was just a ribbon trade right there with the black line and the red on both of those. And they're both still working out right now. You see over here, the crude one, the black line was not in the green. It was in the silver. If I blow that up, let's see, right here, the black line was not in the green. So it's not the highest probability green arrow trade. It's still a good trade, but not the highest probability. Good trade. Okay. We're going sideways here on the NQ right now. So if you're in the live stream and you don't follow us, you want to be notified when we do things like this, follow us in TradingView, right? Follow us, you'll be notified. You get a little notification over here whenever we do a live stream. Again, the only way to get access to the indicators is to take the free trial. Go here to mytradingiq.com. Click right here to take that free trial. All right. That way you set up with your free trial. There's no trade here on the NQ. I'm not going to take this. Long-term direction is flat. Right inside a weekly trading zone. I'm not going to take that. I'm going to choose a direction. Neither one of these other indices put in a lower swing. So that is going to be the deal. All right. We want to see a lower swing over here. I actually want to see it way down below here because we never changed directions. So this is the swing low it's going to exceed for me to really want to trade it again. Okay. Now, if you guys, I know some of you guys don't understand that. We discussed it in a partners meeting a little bit last week. But because we didn't change directions, this is still the swing low that we're working with in a downtrend. Okay. If we would have changed directions, if we would have got a long trade in here somewhere and changed directions, then the new swing low would be right over here. All right. It'd be right here. But because we never did that, we're still in a downtrend. We're still in the same downtrend. This is the swing low we're working with. Does that make sense to you guys? I know sometimes you wonder which pivot bottom you're supposed to use. And if you're in the same trend right here, we were in a downtrend. We never got out of the downtrend. All right, we never had any indication to go long in here. If we did, then we'd start using this one, but we didn't. Okay, let me see if I can find an example of this whole scenario playing out for you. Well, like right here. See, we're in an uptrend, and then it gave us this right here for the downtrend. Now this right here, because we had this move down, and we had a downtrend right here, this is no longer the swing high that we're looking for. All right. Come all the way over here and it becomes this one right here. It's actually even a little higher, but it ended up becoming this one. If you took the black arrows, you could if you wanted to, but I would wait for the green arrows in here. Okay. Because we had this, now you're looking beyond that for the swing high. Right. If we didn't have these opportunities to go short in here, then this would still be the swing high. Right? But once you get an opportunity to go short, if it changes direction and starts giving you longs, that's when you start looking for the swing high. Right? So this is the spot still back here. I know each one of those green arrows would have worked out. You can do them if you want, but I'm not going to. All right. So that said, we got another short over here on the crude oil. Remember, crude is $10 a tick. Right? It's $10 a tick. We expect it's going to get down to this level. Now, I had highlighted these levels earlier, and we hit both of those levels now. I still expect it's going to go back down to there. If I look right now, 85.52, is that one of the levels I have? Nope, it's not. 85.52, we'll draw that one in there. Take this one, 85.52. I'm in this trade, gosh, hang on, I'm drawing this thing and I haven't even. Here, let's take some profit on this one because I had 2 break evens so far on crude. And actually, I was minus 18 ticks this morning on crude. So it's good to take a little profit on this. 85.52 is where it should go down. So I was drawing that in. I was in the process of drawing that in for you. Did we hit it already? We did. Okay, well, there. I guess it's already there. Now go find my DOM so I can manage this trade. Hang on. I thought it was on top. Here it is. Okay, so 63, that's 11 ticks profit. 13 ticks profit. 14. This is 30 ticks all the way down here. 30 ticks. Right. So I'm out with 14 ticks profit. So 10 contracts on, that's $1,400 right there. And that was a nice trade. It took us 2 break evens to get to the good trade there on crude. We still don't have anything here on the NQ. It's got to go down below that price swing low. We did get a lower swing here on the ES, and we still don't have one here on that. All right. Well, I'm just about out of time here for this session. But if you're watching in the live stream, nobody asked me any other questions, right? Go in there. I don't think so. Nope. Nobody asked any other questions in the live stream. So if you want to use the indicators, you have to sign up for the free trial. That's the only way you're going to get the indicators. And once you do that, you give us your login ID. Your login ID is simply this thing over here. You see I'm logged in as CFRN right here. Whatever you're logged in as, you give us that information and we'll enable the indicators for you. And once we do that, they'll be available down here in invite-only scripts. You'll have the TIQ context and the ultimate slingshot. Those are the only 2 indicators on the charts right here. You'll have that on there. And if you want to have your layout exactly like mine, all you need to do is go here to mytradingiq.com, the trade rules page. Click on this right here. It'll be exactly like mine. Okay, you can actually click on that right now and watch mine, I think. If you have access to the indicators. Again, to take the free trial, go here to mytradingiq.com, click on this button. No credit card required. It brings you to this page. Fill out the form. Give us your TradingView login ID. We'll enable your stuff right away. All right. And that's going to be it for this session. David Z, I did send you a link to the meeting that we have coming up here. And anybody else that's out there in the audience, if you have any questions, you can always email us at support@mytradingiq.com or support@cfrn.net. All right. Thanks for coming, everybody. Hopefully, all made some nice, easy trades in here today. See ya. Okay, and now I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. If you are ready.
Yep. Recap of the morning session.
Well, today it took 21 minutes and 6 trades to get to $1,350.
Great start to the week.
Yes, it's much better than last week.
Okay, guys, we'll pick up where we left off on the ES. Now, all alerts, both the logic and concierge trade alerts, are based off of the 30-minute chart. The vertical line that you see separates today, Monday, from Friday. If we go back, you'd see Thursday. Now keep in mind that the Monday session in the world of futures began Sunday night, right here, at 6 p.m. Eastern. See down at the bottom, 1800 hours. Never been in the military, you just subtract 12. It tells you what time it is, 6. Okay. Now, we had a gap higher open. And the gap almost closed. Well, actually, we closed here on Friday. So we didn't close that gap until after the London Open. London opens at 3 a.m. Eastern. So we fill the gap at during the 3:30 a.m. to 4 a.m. Eastern candle. Remember, futures trade around the clock. We have traders around the globe. So price opened last night, trapped between resistance overhead, the BVC, that stands for bull-bear cross. When price crosses above the green line, we're bullish. We anticipate higher prices. When price crosses below the green line, we're bearish. We anticipate lower prices. Okay? Really simple. So, price pulled back to the BVC. When the step line, that's this black line, okay, when it crosses red and falling, as it did here, we expect price to pull back to the BVC. And as it did here, price pulled back to the BVC. Now, what's important to know about price pulling back to the BVC is that the pullback holds more often than it doesn't. again and again and again. So as price pulls up to the BBC, that's resistance. When the market finds resistance, it will go and look for support. And so down we come. Got that perfect stack, price, step line, red and falling, way over here BBC. And price drops to and through the target. And where does it find support? At the weekly trading zone, 4218/4219. Now, these are last week's weekly trading zones. Keep that in mind. In fact, this was last week's lowest weekly trading zone. But because the new zones don't come out till Monday morning at 6:15 a.m. Eastern, all alerts issued Sunday night are based on last week's zones. Then any alert that goes out after 6:15 a.m. Eastern on Monday, those are based on this week's zones. And so on tomorrow's broadcast, I will have this week's zones up on the charts. So price fell to the zone. When price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support. When the market finds support, it will go look for resistance. So we ran up to the BBC. Resistance shot us back down to the zone. Then we get above the BBC. So now we're thinking bullish. And so I talked about the perfect stack down. Now you got it going up. You're above the BBC. You got price, step line, and climbing, BBC. Now, why did price grind to a halt right here? Well, I'll tell you. That's one of this week's weekly trading zones, 4281/82. Now, you'll notice we are printing a green candle, so we could go back up to test that zone again. But, in fact, during this broadcast, based on the new zones, we've gone from zone to zone to zone during the time of this broadcast. So it's been pretty active. We got a zone at 42.59.60 and then 81.82. Now we're almost back to the 59/60. We almost pull back. Now what will happen as the step line crosses blue and climbing, price will most likely retrace back to the BBC. Price always reverts to the mean. In our case, the mean is green, and we call it the BBC, bull bear cross. Okay, you can see pull back, pull back, pull back, pull back, pull back. Then once price gets on the other side of the BBC and pulls back, pullback holds more often than not, whether you're pulling from below or from above. Now, if the step line successfully crosses blue and climbing, then you should anticipate a retracement back to the BBC. Now, there won't be an alert published for that, because in the Logic 247 channel, while there's 15,250 individual handcrafted alerts, every one of them is a trend trade as defined by the 30-minute chart, price, and the BBC. I'm not saying there's anything wrong with counter trend trading. What I am saying is you would do yourself well to learn to trade with the trend. And once you've got that nailed, then you can start to experiment with the counter trend trading. Okay? Because people always ask, well, if you expect price to drop to the BBC, why not? Aren't you putting out a short alert? Well, because people who are using the Logic 247 alerts to learn how to trade, I want them to have the highest probability, lowest risk trade opportunities. You see, as price starts to drop, see this low right here? That could very well become support. So in other words, we have a retracement, but we don't quite make it to the BBC. But we did make it to the short target twice, and the long target, yeah, we didn't quite get all the way there. What was the high? 80 and a quarter, 80.75. So we missed the long target by 5 ticks. But did you have plenty of room to get your goal for the day? Well, let's see. This candle opened at 49.75. So let's just call that 42.50 to be conservative. 42.50 to 42.80. That's 30 points. At $50 a point. It's a nice day's work. Now, I'm not suggesting you should stay in a trade to get all the way to the target. What we teach you is the simple way. The simple way is to just get your goal for the day. Okay? $100 per contract traded. Whatever market you trade. If it's the S&P, it'll be 2 points. Russell, 2 points. Dow, 20 points. Crude, 10 ticks. Gold, 10 ticks. $100 per contract traded. Now, when you become a passport holder, you're not going to start trading real money right away unless you want to just blow up another account. First, you need to learn the strategy, how to read the indicators, how to, put the pieces together. So you're going to receive, when you become a passport holder, what's called the 2420 blueprint. It's going to instruct you to first, before you start trading in your live account, in your demo account, put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with one contract. Now, you're going to trade one contract till you increase your account balance, your real money account balance, by $2,000. So if you're making $100 per day per contract, that's 20 days to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. Big difference between the first contract and the second contract is the first contract is funded with your startup capital, the money you funded your account with. But the second contract is added with profit you earned in the market. Now, in a perfect world, to go from the first contract to the second contract, 20 days. But once you add that second contract with profit you earn in the market, now you're making $200 a day. Same 2 points, same 10 ticks, whatever market it is you trade. But you're making twice as much money because you're now trading 2 contracts instead of 1. If you're making $200 a day, and remember, it took 20 days in that perfect world to go from one contract to 2 contracts. And now that you're making 200 a day, it only takes 10 days to increase your account balance by another 2 grand. So now you're 30 trading days in, you're trading 2 contracts, and you just got the green light to add a 3rd contract. So the same 2 points is now worth 300 a day. So 7 trading days, you just made another $2,100. You get to add another contract. By the time you hit 5 contracts, the same 2 points that used to make you $100 a day, the same 2 points now make you $500 a day. Once you reach 10 contracts, that's $1,000 a day. And that puts you in the top 3% of wage earners worldwide. Think about it. Everybody wants to just jump in, click the mouse, get rich overnight. Well, how's that working? How has that worked? Hopefully you've now realized that that dog won't hunt. Everybody's looking for the Holy Grail when the only Holy Grail in the world of trading is actually learning how to trade. But some people, it's like, man, that just sounds like a job. Well, it is. Actually, it's a business, and you're the boss. And the sooner you learn how to read the chart, like a newspaper or a good mystery novel, the sooner you won't need anybody to tell you when to get in and when to get out. All you need is a chart, fast internet connection, and on any given day, it shouldn't take you very long to reach your goal for the day. But don't sit down with the expectation that you're going to be one and done. Now, there should be days where you are one and done. But don't expect it. Your mindset when you sit down should be, I will be here until I reach my goal for the day. Because you might get stopped out on the first trade and the second trade, maybe even the third. If you get stopped out 3 times in a row, you really should back away from the computer, switch to a higher time frame, and find out what that obstacle is that keeps, kicking you in the rear end. And then adjust accordingly. But if you want to learn how to trade for a living, okay, getting stopped out, getting your feelings hurt, and quitting for the day, you'll never get there. You've got to learn to get your goal for the day. Every day. I'm not saying there'll never be a day you don't get your goal. No. But most of the time, we're only talking about 2 points. Now, in the grand scheme of things, how much is 2 points in the ES, for example? Well, over the last 14 days, the range of the average daily candle over the last 14 candles, 66 points. From the low of the day to the high of the day. Over the last 100 candles, 48 points. But we know price doesn't travel in a straight line. You get a leg and then a retracement, then a leg, then a retracement. So if the average true range is 48 points, then there's a good probability that price actually traveled 150 points. Up and then down and then back up and then down. So it's so important for a new trader to have realistic expectations. And that's where Some of these websites and these emails with all their clever written ad copy get your head infected with unrealistic expectations. You get frustrated, you think you're stupid, you think you'll never be able to do this, and that's just simply not true. What you need more than cleverly written ad copy is you need someone to teach you how to do the job. Whatever your job is now, somebody taught you how to do it. If you're a carpenter, it might have been your dad, you know, or a plumber or electrician. Then there's careers, of course, where you have to have a license. I think with electrician, you probably have to have a license. Probably a plumber too. Carpenter, I don't think so. But attorney, doctor, airplane pilot, you know, there's tests, there's requirements. There's an investment of time and treasure to be able to operate in that field. Trading has such a low barrier to entry. Well, if a person affords it, they figure they can do it. Just because you have $3,000 to stick in an account somewhere doesn't make you a trader. But it does put you in the position to learn how to trade. Okay. So, ES still crossing on the Dow. Remember the vertical line. This is where we started last night. Gap higher open. Ran up to the BBC, found resistance. Resistance sends us looking for support. So we went right to the target. Goal for the day several times. 33,270 down to 160. 110 points. You only need 20 points to get your goal for the day on the Dow. And if you look left here, you'll find out why price stopped here. Then price got above the BBC. Gave us a leg, a retracement, pulled back, held. Gave us another leg. And this double top here, why did price stop there? Look left. See where the step line crossed red and falling? Okay. So where does price go? Back to the BBC, and what does it find? Support. So now it has to overcome an obstacle, because the step line in blue and climbing are directly above price. Those are potential obstacles. So you got to overcome those obstacles. We'll call it 33,310 to 33,360. Just 50 points. Remember, it only takes 20 points to get your goal for the day. Now, on this go, could price take out that high and just keep going? Sure. You just have to look left to see where the obstacles are. When I was talking earlier about looking left to see where the obstacles are, okay? Like on this move down right here. The support way back over here became this support, became this support. This high is a reflection of this high right here. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Here's the Russell. Here's where we opened. Pulled up to the BBC, the pullback held, just right down to the target, to the tick. Bounced us up to the step line, which served as good resistance. That sent us down another few points. Then we pulled back to the BBC, and we had a big move down, low of the session. But by the time the 30-minute candle closed, we were already back to the BBC. And then we got a move above it, a leg, a retracement, a leg, a retracement, a leg, a retracement. What's really important to understand is you don't wait for a good leg to get long. Some of you go, man, every trade I take, you know, I see the market setting up, and, you know, as soon as I get long right here, I get stopped out. It's because you're getting in at the wrong spot. Okay? You should be getting in here, not here. Here, not here. Wait for the retracement. And then if the market is going to continue, in this case, a southerly direction, or in this case, a northerly direction, just grab your goal for the day, and then exercise the discipline necessary to put the mouse away. Here's the NQ, gap higher open, step line crossed, pull back to the VBC. Resistance sends the market looking for support. There's that perfect stack. Down to the target, through the target. The zone was 14,510/11. So we made it down to 20. So we missed it by a few ticks. But we bounced back up almost to the BBC. Now this would be a counter trend trade. See how it didn't quite get to the BBC? And what does it do? Comes back down. And this time, we miss it by 4 ticks. Okay. Zone. Then we get back above the BBC. Here's this candle right here is the Wall Street Open. Typically the largest candle of the day. And then off we go. And we make a run all the way to the long target. So we hit the short target, the long target. This was a green candle back on Friday, but when it got to this spot, it failed. So institutional buyers are the ones who move price. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. They recognize the potential for this to be resistance, and so they take profit. And while it takes financial commitment for price to rise, all it takes for price to drop is for the institutional buyers to hit the pause button. Now we've got a situation here with the step line attempting to cross blue and climbing. So we'll pull back to the BBC. Would be expected. Crude oil. Here's where we opened last night. Came down to the zone, consolidated. Only 3 things happen at a zone. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time is the slice. And so down we go. Got that perfect stack. And we don't quite make it all the way to the target, but there's plenty of room to get your goal for the day. Then red and falling turns to blue and climbing. We traveled through last week's zone, and why did price stop here? Just look left. Price comes back to the zone, consolidates, continues to drop, hits the target. And this zone is 85.20/25, and price dropped to 35. We missed hitting the zone by 10 ticks. Okay, silver, no, gold. Gold, now this first candle, it doesn't count because the CTAs didn't come out until 6:50, which is during the life of this candle. But we came down through the zone. Now this candle sliced through the zone on the 30-minute chart like it wasn't even there. But when it ran out of steam, it retraced to the zone it sliced through, continued in the direction of the slice. Now this candle opened at 83.3 and dropped to 75.5. You only need 10 ticks to get your goal for the day. Step line crosses, price pulls up to the VVC, and while the pullback holds more often than not, we know that eventually price will trade through, as it did here. And why did price stop right here? Look left, bearish cross. Whenever there's a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support or resistance the first time up. Same is true of a bullish cross, as we talked about on the daily. Okay, this bullish cross led to this big move. When price gets back to this area, we expect it to be good support, as long as it gets back to that area. And now gold just flatlining at last week's zone, 85.86. Remember, tomorrow my charts will have this week's zones. It came out this morning at 6:15 a.m. Eastern. So this was the opening candle, and then we came right down to the target, and we hit the zone where price got rejected. Sent us back up to the BBC, consolidated at the BBC for quite a while. Blue and climbing turned to red and falling, and it took us back down to the target and the zone where we consolidated. Support sends us to resistance. Resistance sends us back to support. All markets, all time frames, over and over, again and again. The euro. Here's where we opened, right at a zone last night. We had red and falling overhead. Once we get below the BBC, then you just pull the trigger to go short. We didn't quite get to the short target, but we traveled far enough to get your goal for the day. Then we get above the BBC, and we make it up to the target. Market finds a resistance just before we hit this high, put in on Thursday. Okay. Then on this candle, just barely take out the high put in on Thursday. So when we hit resistance, the market looks for support. Support sends us back to resistance. Resistance sends us back to support. And then support sends us to resistance. Weekly trading zone. 106,900. And that was last week's highest weekly trading zone, the 6E. So hopefully you'll see why it's important that even though you get the new zones 6:15 a.m. Eastern Monday morning, hang on to the previous week's zones. Usually by Tuesday, the new zones have kicked in and have taken control. But it's nice to have a little notepad somewhere with the previous week's zones. Okay? All right. So that covers it. Around the world. So we came so close to touching that 62% retracement. How we closed today, close at the top of the window. We could go back to the 50 and the step line resistance. We're about to get a bearish cross, red and falling, crossing below the VBC. So the stage is set for another leg to the downside. Question is, will we catch a bounce back to the 50 before we make the trip? And once we get through the 62, we've got potential support right here. That was defined on May 4th. And then the bullish cross from March 31st. To become a lifetime member with no recurring fees, no upsells, no nonsense, not ever. Pay once, you have access to everything for life. No fine print, no asterisk. Passport is your all-access pass. Everything we do, everything we've ever done, and whatever we do in the future. 9 out of 10 new traders fail, not because they're dumb or unlucky or undercapitalized, although that undercapitalized can be part of a problem. But the real truth is that they don't have a teacher. Now, Futures Magazine in 2006, they spell this out in great detail. But what they didn't answer was the why. Why would any field of endeavor have a 90% washout rate? It doesn't happen in any other industry. Well, the reason is because all those other industries have someone to teach the newcomers how to do the job. But traders, hey, they open an account and start trading. You know, watch a couple YouTube videos, maybe read some kind of technical analysis book, and all right, I'm good to go. And then all of a sudden, the broker's cheating me, the game is rigged. There's all kinds of excuses, not reasons, but excuses. The reason is you didn't have someone to teach you how to do the job before you started trading real money. And you desperately need that. If you want a fighting chance at becoming the 1 out of 10, then you're going to need somebody to teach you how to do the job. Not just sell you some indicators with a PDF on how to use them, but to actually take you by the hand, spend time with you one-on-one, and teach you. That's why we have a 2-hour and 15-minute now live training room every trading day. As a passport holder, you have access to unlimited one-on-one private mentoring. The methodology you learn and the indicators that you own for life as a passport holder are fluid across all markets and all time frames. Remember, price flows the same across futures, stocks, crypto, forex, ETFs, from support to resistance, back to support, over and over, again and again, never-ending cycle. As a passport holder, you'll also receive the Logic 247 alerts. Again, if you missed the beginning of the broadcast, we went 8 for 8 last night. That was nice after a difficult week last week. You'll also receive the concierge trade alerts, which we just went over. You'll be able to attend the members only workshop on Thursday night. All that and so much more. It is everything a trader needs, all under one roof at one low price. And you're a couple of mouse clicks away from becoming a lifetime member. EminiFuturesTrading.com. If you have any questions, call us at 949-42-EMINI or send an email to support@cfrn.net. Let's wrap it up with our good word for the day. Now, Friday we talked about how to protect your family. Today's topic, you have two options: forgiveness or bitterness. Matthew 18:21. How often shall my brother sin against me and I forgive him? The Bible says in Matthew 18:21 and 22 that Peter came to him and said, Lord, how often shall my brother sin against me and I forgive him? Up to 7 times? Jesus said to him, up to 70 times 7. 70 times 7 equals 490 times. And it's your brother, someone you have to live or work with, whom you're called to forgive. In essence, Jesus was saying, forgive and keep on forgiving if you want to have a relationship with this person. Let's face it, we all make mistakes because we're flawed in different ways. Perfection only exists in God. Recall Jesus' words in Luke 23, Father, forgive them, for they know not what they do. Truer words have never been spoken. And very few concepts are more significant to remember than a relationship. While it's perfectly normal to feel anger and a natural human reaction to feel mistreated, there is a big difference between healthy anger and the corrosive emotion of bitterness. Bitterness is relational cancer. As American author Maya Angelou said, bitterness is like cancer. It eats upon the host. It doesn't do anything to the object of its displeasure. In this case, the host is your relationship, and forgiveness is the medication and the cure. Jesus said in Luke 6:31, and just as you want men to do to you, you also do to them likewise. Carrying a grudge, being bitter, has zero impact on the person you're angry with or bitter with. You're the prisoner, not them. The act of forgiving them doesn't set them free, it sets you free. That's powerful. Offering the degree of forgiveness you wish to receive ensures that your relationship stays healthy and free from the disease of bitterness. Now, this doesn't mean you let people walk all over you like a doormat. It's not what it's saying. It's not saying be stupid, it's saying forgive. Is that sometimes hard to do? Yeah, but the more you practice it, the simpler it gets. It's like going to the gym. First, you can lift 5 pounds, then you can lift 10 pounds. You get the idea, right? It gets easier. But if you pray, God will give you the grace to forgive. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.